All right, we're live. Hey, how you doing, everybody? Bruce here, Stock Markets with Bruce, doing a live show unannounced, right off the cuff. How's everyone doing out there today? Welcome to Friday, December the 4th, 2020. Wow, what time is it? 11:49 out here in Mountain Time, so 10:49 LA time, and 1:49 New York time. Welcome all of you who are watching me from wherever you're watching me from, North America, Europe, on the rerun. Fantastic. Hope you're having a good day today. I thought I would do this quick, a little live show today to have some fun. Say hi to some of my viewers and just hang out a little bit, talk a little bit about what's going on in the markets, talk about this channel a little bit, and yeah, do a little, what the hey. If you're watching me, say hi to me. Tell me where you're watching me from and what's your temperature today. Here where I am in Creston, British Columbia, Canada. A very cloudy day today. The weatherman said it would be sunny today, and it's not happening. It's very overcast with low cloud, and it's about 32, 33 degrees, and we thought it would be 37, 38, so we're a little upset. we're terribly upset, but it's life in the winter, in the harshness of Canada. You got to tough it out. We have Timmy Hortons to help us get through the winters, but still, sometimes it's not enough. Colleen is here. Hi, Colleen. How you doing? Welcome to the spontaneous live show without any lead up whatsoever. It's nice to see you here. Hope you're having a good day today, and hope you're going to have a great weekend coming up. Who else is here? Oh, I got Adventures with Duncan, my buddy. How you doing there, Duncan? Nice to see you, pal. You notice I'm not wearing the wife beater undershirt, eh? I got like real sleeves. Nice to have you, pal. I hope you're doing well today. Calling is 73 in Lake Mary, Florida today. I bet you Duncan's got some nice weather too. Fred B. Hi, Bruce. Port Charlotte, Florida, 73. I got Floridians. Every one of these viewers, I believe, is Floridian right now. It's the Floridian Stock Markets with Bruce show today. Welcome, you wonderful people. I wish I were down there with you, enjoying some nice warm weather and getting ready for a cruise. What's that, dear?
Especially today.
Yeah, why?
Because we were supposed to be there.
That's true, especially to Jennifer, my Jennifer Aniston lookalike wife, who's never been on camera. You can hear her voice, and that sounds just like her. She's telling me today that today of all days, we really wish we were down in Florida, her and I, because day after tomorrow, the 6th of December, was supposed to be the first group cruise for this channel right here, Traveling with Bruce, so my other channel, Stock cruise ship news and travel news, and we were supposed to go on the Harmony of the Seas out of Port Canaveral day after tomorrow for our group cruise, which got canceled like everybody else's. Unfortunately, Adventures with Duncan. It's mid-70s in Florida. Laughing out loud. Marty Finver, Marty Lake Worth, Florida. Another Floridian. I've got 5 Floridians on this channel right now who've said hi to me already. If you're not from Florida, you can certainly say hi to me. Tell me where you're from, wherever in the world you are from, and please say hello to this YouTuber from Creston, British Columbia, here in Canada, because we're stuck up here. We can't get down where you guys are. We're sort of up here, and we're not allowed to allowed to cross the border into the U.S. unfortunately. And so we're kind of stuck here, and what can I say? We're having to tolerate the harshness of 33-degree Fahrenheit weather. You believe that? You believe that's harsh? If you're from Florida, you believe it's harsh. But if you're from anywhere else, you're going to look at me and go, come on, man. Come on, man. It's not that bad. What can I say? Pardon me while I'm looking up here at my big-ass iPad. I'm trying to get it to work properly. I'm trying to actually get it to go to my this channel so I can find my show and make sure everything is up and running. There it is. Looks like I'm live right there, and there they are. So I can find my show and I can hear myself talking, so I know I'm there. So I am alive. This is great. Adventures with Duncan. I have plenty of room, Bruce. See, it's nice to know. I've got friends in high and low places. Robert, hello, Bruce. How are you? Boston is 60 degrees before the big storm tomorrow. GameStop is up again today. It's had a run, hasn't it? And it got an upgrade from Wedbush Securities. They upgraded it, and with a $16 price tag from, I'm not sure where it was it 5 or 6 or 8? It's now 16. David Heinzholm. Hi, Dave. Good afternoon. 52 here in Kansas. So I have Massachusetts resident, a Kansas resident, And I have a number of Floridians here right now. I will say hi to all of you, of course, in just a few moments while I organize myself here. Here we go. The show is running on my phone as well. There we go. Fantastic. And we are good to go. Dan Massey is in the house. Hey, Dan, how you doing, buddy? Good afternoon, Bruce, from mild Hamilton, Ontario, in Canada. And Robert, listening in my car now. Adventures with Duncan. Do you think NIO is the next Tesla? No, I don't. If any company is based in China, I'm not interested. I don't trust the numbers. I don't trust the accounting. I don't trust the reporting. I don't trust the business plan. I don't trust the long-term future of the entity. If you're a market watcher, even casual, you probably noted a couple of weeks ago how the Alibaba people were trying to bring a new offering to the markets through, I believe, Shanghai, Hong Kong. And they got hauled in for a little interview with some regulatory officials in Shanghai who were told by Beijing, have a chat with these guys. And all of a sudden, the $30+ billion offering is indefinitely delayed. Funny how that works in China. I don't know of underwriting that's ever gone south because president of a publicly traded company or potential publicly traded company went to Washington to visit anyone or visited someone at the SEC, and immediately a massive underwriting got pulled. I've never heard of that in the U.S., but it happens in China. So I don't trust anything out of there. I just sorry. Facebook user is in the house. Hello there, Facebook user. I don't know your name because it doesn't tell me who is actually watching on Facebook, but we are broadcasting simultaneously this channel on Facebook and here. And so welcome. If you say your name, I'll say hi to you, of course. Kirk Brunson from the Big Apple is in the house. How you doing, buddy? Good afternoon, Bruce. Kirk from New York City is here, but he's still at work. Way to go, man. And friends laughing out loud. Someone at Facebook is saying hi to everyone out there. I wanted to go live today on this channel for a couple of reasons. There's a lot happening in the markets, so that open it up to any questions you have about the markets. I gotta say, NIO, I'm not interested in following that stock and being involved with it. Here today, gone later today is my answer to that one. I don't trust that deal, and it might go to hundreds of dollars a share. It might be a big winner, but it's just gonna have to win without me because I just kind of like books you can kind of trust, and I like the accounting and disclosure forms that the SEC makes companies use. Kind of feels good. Tom Henry, hi, Bruce and friends. Tom, how you doing, buddy? Welcome to this channel today. Adventures with Duncan, hello there, Kirk, and Adventures with Duncan, thumbs ups, everybody. The other reason I'm live today is this is a big moment for this channel. I wanted to share it with those of you who've come by. If you're watching, even if you're watching on the rerun, you're part of the reason that I'm live right now, and that is that as of today, this channel right here, Stock Markets with Bruce, it will surpass 4,000 hours of watch time today. And with its existing subscriber count, which I think the last time I looked was 1,040 something, we now have, or will have today, the two requisites to get this channel monetized: 1,000 subscribers and at least 4,000 hours of watch time. And this show right here is my way of pushing it over the top. And I thought I'd go live here with you, say hi to you. I'm going to go live in about an hour from now on Traveling with Bruce, but I'm going to go live over there on the sponsor member hangout show for sponsor members of Traveling with Bruce, and only those folks will be able to hang out with me there. But I thought here, I'll do a live show and invite all of you in to say hi to me. Every minute you spend here is another minute of watch time this channel needs to get over the hump. We are this close. We were only a few hundred minutes away this morning from making the hump. So I'm very pleased to say to all of you, I think you guys are the group that will cinch it for me to put me over the watch minutes that I need. Dave, 1,000 of us, yeah, over 1,040, almost 1,050 now. Howard Green, hi, Bruce, from a gray Long Island afternoon. Howard, welcome to the show. Thank you for being here. It's nice to see you. I know that Howard is a sponsor member of my Traveling with Bruce channel. But here on this channel, all followers are identical because I can't have memberships yet for this channel. I need 30,000 subscribers. Got a few more to get before we can have any kind of a private sponsor member chat hangout here. But whenever that day comes, we'll when we're invited by Facebook to do it, we'll do that too. And I'll have private hangout shows, sponsor member shows for this channel and at Traveling with Bruce. So fantastic, guys. Dan Massey, congratulations, Bruce. Thanks, Dan. Hard work. It's been about 4 months. I think we opened up this channel in July, August. I haven't really, I haven't worked as hard on this channel as I did on Traveling with Bruce when I created my first channel, because I'm on top of the first channel a lot. It's got 61,000 subscribers. But I knew that after a few months, this channel would just naturally get there. But I am not as active on this channel as I have been on the other, but this will ramp up now that we become monetized. I have incentive to get on it. Sean Murphy, hi Bruce, good to hear about the channel. My GameStop and Tesla still rocking it. That is good stuff. That's good news. Yes, indeed. They are both doing very well. Tesla, of course, is doing well for a number of different reasons, but lately the big one the reason for that has been that the company has been included or is going to be included in the S&P 500 index. And I think that inclusion date is coming up very shortly. And what it means, of course, is that the value of Tesla is so big, that it's probably going to be one of the top 10 most capitalized, highest capitalized stocks in the index. Of all 500 companies, Tesla is getting up there in capitalization. It's approaching 600 billion. Which means that all of those hedge funds and ETFs and the so-called exchange-traded funds and indexed funds that exist, the mutual funds and so on, they all track the performance of the S&P 500 or various segments of the S&P 500, the transportation part and so on. All of these entities now will have to purchase Tesla stock in their portfolios so that as Tesla moves, the S&P moves, they move and track the S&P going forward. If they don't have Tesla in their portfolio, they only have 499 of the 500 stocks, and Tesla being such a big chunk of the S&P 500, they're going to not be able to track the performance of the S&P on a percentage point basis, at least not as easily. So they're going to have to sell some of the 499 shares they already have if they have all 500 shares, and a whole bunch of Tesla instead, and that'll give them an equilibrium of all 500. Now, there's one company coming out of the S&P 500. At the moment, I don't know which stock that is. They'll all have to sell that stock. So the one stock getting kicked out will be dumped by these funds. The Tesla will be picked up instead, but because Tesla makes up such a big proportion of the value of the S&P 500, as opposed to the company that's going out, it might be a $10 billion company going out and a $580 billion company going in. You can imagine how much stock has to be purchased to replace the other. So that's why the other 498 stocks some of them, they'll be selling some of those, all of them, a bit of each one of them, so that money can then go into the Tesla and average it all up. It's complicated. There's computers required. I wouldn't want to be the guy trying to manually figure this one out. I think it's impossible to do. So yeah, Tesla. The thinking is that it's going to go higher because of the inclusion and the amount of buying that's going to come into the stock. There's a lot of speculation that stock could go even higher. And because there's such a huge short position on the company, short sellers have been squeezed and squeezed to buy their stock back, and they're losing gazillions. There's upward pressure there. And then, of course, the company seems to be firing on a number of their cylinders. Not that they have cylinders, they're electric. They're firing on all their batteries. How's that? There you go. Traveling with Bruce says hello. Stock Markets with Bruce says hello today. Not too long from now, you will start seeing me use Stock Markets with Bruce mugs, and I will have Stock Markets with Bruce t-shirts. It's only a matter of time. And you'll be able to order some for yourself anytime you want. Keep an eye. Facebook user, now you get to wait about 3 years for approval. Laugh out loud. Congrats on the milestone. We'll see how long it takes, whatever it is. Tom Henry, Norwegian is over 26 bucks a share today. Adventures with Duncan, do our Tesla stock goes up when it hits the S&P? That's what I just talked about. Tom, poor Royal Caribbean down $1.95. Yes, they're down $1.95 because they announced last night after the close through an SEC filing that they are issuing $1 billion of stock from their treasury at market prices going forward to raise another $1 billion in cash They have about 15, 20 brokerage firms that are in on that deal. And what will happen is the brokerage firms will rustle up buying interest in the stock and then arrange at market trades where the seller is Tesla, the buyer is an investor. And these 20 firms or so will piecemeal together $1 billion of paper and distribute it out to the street worldwide, and well, probably US wide anyway. And then and $1 billion will be transferred to Tesla. To Royal Caribbean, excuse me, not Tesla, Royal Caribbean, less fees. So Royal Caribbean will probably end up paying about 1.25% for the deal. They might even offer the stockbrokers an option for some for themselves if they want an extra option. That usually is enough to cover the fees so that the company nets out $1 billion. If the offering goes very well, and it could, I don't know, if it goes really well, they could up that. And I wouldn't be surprised if they take $1.5 billion, $2 billion instead of $1 billion. All depends on the interest from the investors. Markets are up today as a whole. Some of the Norwegian and I think Carnival are both up a little bit today. There might be some good demand for Tesla, for Royal Caribbean. I was thinking that Royal Caribbean would be lower today than it is. I was speculating that maybe it'll be off $3 to $5 a share, but only off about $2 right now. It was a little lower early today, but it's sort of been inching back. So there's some underlying strength there, but I'll tell you, 12, 13 million shares are coming into the market. So if you're a buyer of Royal Caribbean, you can get all you want, unless you can afford all 12 million. So $1 billion will be raised. I don't know if it'll be done today, but something tells me over the next few days, this will get done. There might be some institutional crossing of blocks of stock that'll be arranged, but it's all on the electronic boards. There are no more brokers on the floor of the exchange yelling at each other to do this transaction. It's all done on keypads, on computer systems. Things have changed since I was a stockbroker in 79 to about 87. Things have changed a lot. And the dollars are much bigger than they used to be. Steve Regan, why aren't they selling RCL off hard? That's a good question. It could be that people are just figuring, well, if they raise $1 billion more, that gives them another 4 months of money to not sail. Hey, they don't have to pay interest on this money. It's just stock. They're printing the certificates, it's a manner of speaking. Maybe the street is thinking, hey, they have they got $1 billion or so or $2 lying around now. Here's another $1 billion. This will definitely get them through the latter half of 2021. You know what? They're going to be around when cruising does start up. And because of the vaccine talk that is happening, that there's a possibility of a vaccine being available to the masses sometime next year, probably in the second, third quarter. The end of the virus days and pandemic might be nearer than further. And so people are prepared to pay a price today to get the stock for happy days tomorrow. I have bad news for these people, however. Anyone out there buying cruise stock right now? I got bad news for you guys. I don't like your upside potential from here at all. It might be short-term upside. Next couple of days they might go up a couple bucks a share again. Sure, sure, quick win, yeah. But if you're looking for a 50% return or a doubling of your money, you can forget about it. I don't think that's going to happen for a decade. Why am I such a downer on that? Well, by the time the cruise lines finish raising all the money they need to raise, they will likely have doubled the number of shares outstanding from January of this year, 2020, to November of 21 or January 22. By the time they finish raising cash to get through this, downturn, the startup, get all their crew members, and get up and running, they'll likely have doubled the number of shares outstanding. And so even if they make exactly as much money as they made in 2019, which they won't because they have much higher interest expenses that they're carrying now on all those bonds they issued, they have to actually make more money than they've ever made before to equal the net profit they made in 2019. In other words, they have to set an all-time new record. They're not going to do that in 2021 or 2022 because cruise lines are going to be on an occupancy restricted basis. So they're not going to be sailing with all their ships full. And they don't have as many ships anymore as they used to have either. Look at Carnival having offloaded about 18 ships. Anyway, even if miraculously they can double the price of every cruise and they can rack in all kinds of profits for every sap that goes on these cruises before the vaccine, which won't happen, I don't think. What's going to happen is the company is going to earn a lot of money, and then they have to divide the money into the number of shares outstanding. And since there's double the number of shares outstanding, the profit per share number in 2023, 2024 will be half of what it was in 2019. You follow what I'm saying? So even if they make, let's say they used to make $1 billion and they make $1 billion again, you now have to divide the $1 billion in profit by double the number of shares, because that's how many there are now, double the number, which means the earnings per share is half of what it used to be because there's double the number of shares, which means that the shares, which used to trade in the case of Royal Caribbean, $135 a share, will top out at $62.50. And I think that can't happen for like a decade, even that price. So yeah, I don't like the chances of the company doing well. Keep in mind too, they're getting new ships out. They'll be built and delivered. Won't make a darn difference. They got to pay the extra costs to buy those ships, to finance those ships, to carry those ships. They'll offload some of their older ships, but they won't get a lot of money for them. And so their costs of operating will go up and up because of a newer, more expensive fleet. Again, they're not going to make the kind of money they made in 19 for a while, and divide that into the double number of stock. And that's the same for Carnival and Norwegian. It matters not. They're not going to earn as much per share as they used to earn even last year. And so the shares right now are overpriced. Royal Caribbean at $82 a share. Royal Caribbean's potential, ultimate potential, is $62.50, maybe in 10 years. So why pay 82 today? That's called losing money. I'm old school. I like buying low and selling high, or buying low and selling higher than that. Anything higher than what I buy at is a profit. If you pay $82.50 a share today, and after 3 years of operation, they make enough money to justify a $62.50 price, I think you're going to lose money on that deal. Something tells me if it's trading at $62.50, because that's what it's worth, you're going to be down $20 a share. I think that's a loss. Now, I don't care what your tax deal is and your write-off potential. You're still going to lose money. Even if you get some of it compensated from the tax man, you're losing money. So I wouldn't be buying cruise stocks right now. I'd be shorting them. I would be on the opposite side of a long position. But I don't know if shorting today is the day. The shorting of these shares might be Tuesday, Wednesday next week. We'll just have to see how this market reacts in the meantime. There's a lot of cash coming into the market. It's a year-end buying spree. They're all excited out there about the potential of a deal, of another pandemic relief package. I can tell you right now, most folks who are going to get any money from the federal government of the United States are the kind of folks who are going to get this check, and it's already spent 10 times over. So no one out there is going to get a check every month for the next year from the government of the United States. They're going to get a one-time check, $500, $800, $1,200, whatever the number is. That money was spent 3 months ago, and there are IOUs all over the place. I have to imagine there are Americans out there who have got debts with payday loan operators, with interest rates of I don't know what, and this money is going right there, and they're just going to turn around and try to reborrow again. It's a lost cause. There's just not enough relief coming out. The talk was the Democrats had passed a bill. I think it was $2.8 trillion back in June. And right now, Mitch McConnell is maybe thinking of a $900 billion deal. And I think $600 billion of that was money from the first deal that wasn't spent or something. And there's only $300 million of fresh cash. This is such a dead duck offer. I don't even know why Nancy is talking to this guy. I really don't know. If I were the Democrats, don't say anything. Wait until the 21st of January, or wait till the 6th of January, actually. And let's see what happens in Georgia with those 2 Senate seats. If the Democrats get that, they have control. Mitch is out. Schumer is in. Nancy and Schumer can then work a deal with the pending White House going forward. So on the 21st of January, $2.5 trillion deal will come out the door. A $4 trillion deal will come out the door. Maybe $1,200 a month for 6 months. $1,200 a month for 3 months, consecutive months. Maybe I don't know, all kinds of money for the real beaten up people out there. And that money will immediately be spent. No one has a savings account that's poor. People who are poor spend money right away. They want food in their fridge. They want to pay bills. And that money is in the economy like you can't believe. And that would be good for the markets. But this deal that's being talked about, I don't know. I don't know who benefits other than whoever can qualify for the so-called loans that are being handed out. And I know one group that were able to get those 1% loans are the payday guys. Did you know that? The payday guys were able to borrow money from the U.S. government at 1% interest and then turn around and lend it out to the poor and beat up for 400% interest, whatever those rates are, 33% a month compounded or whatever the number is. Yeah, that's who's being looked after on that deal. I don't know if I'd be all that proud about that deal. Tom Henry, it's now December 4th. What's the word on your YouTube funding for November? We have not had anything taken away, but it ain't over. But as of the 2nd and the 3rd and now the 4th, so far, they haven't touched it. But I still expect the first 7 or 8 days, maybe the first 9 days to be in trouble. But as of an hour ago, they haven't touched it. But I'm not counting any chickens yet. And so, yeah, I'm being cautious on that. Thanks for asking, though, by the way. Fred B., I bought your boombox. It does enhance the sound of the phone. I bought the clock from Redbubble, and it's very nice, Redbubble. And I'm a subscriber. Remember, Fred B., thank you, buddy. That's right. We did send you one of these cell phone amplifiers. Right here, you slip your cell phone right in here, and it just blares out across the room because that's the chamber it comes out of. These are great. No batteries, no software to download, never crashes, never fails, always works, made of real wood. Yeah, it's pretty cool. Thank you, Fred, for being a follower and a member. I really appreciate it. Facebook user, by the way, I forgot that Facebook user was Chile. Right on, Chile. Right on, buddy. David, from here, a double is unlikely. From $10 a share, we're already well past it, and lots of folks were yelling sell at $10 a share. Yes. I think it's going to go back there. That's where it really should be. Dave, Carnival, that's the stock he's talking about. Maddie Ryan, thumbs up, Spruce. I miss a lot of your stock videos. Sorry if the following is a repeat. I understand you were once a broker. What are your overall thoughts with shorting stocks? And if you're going to short stocks, you have to have some backup. You got to have the kind of you got to have a mental capacity to handle it. It can be wearing. If you don't have the mental capacity to really tough out a short sale, then buy puts, buy put contracts. You may not be as successful every time, but if you risk a portion of your dough towards a put contract or 2 or 10 or whatever, but stay within the money. Don't get too far out. Try to stay close to the strike price. David, I expect movement big time next Thursday when the FDA announces its thoughts on the vaccine. Interesting. Yeah, the markets could be interested for that. Tom Henry, can we build Canada if they spend that much? Jiminy, hi, Bruce and all, 55 in Delaware. Welcome, Jiminy. Tom, I hope the Georgians are smart enough to vote Republican. Oh, my God, Tom. Kirk Brunson, can you explain brokerage cash on my Robinhood account? Can you explain brokerage cash on my Robinhood? And I can't. I'm not a Robinhood guy. I can't use Robinhood out of Canada, so I'm not that familiar. I know of it. I know that's the trading platform and all that, but I'm not sure exactly what Robinhood Cash actually is, and haven't had time to look it up, to be honest with you. I've just been just too busy, keeping an eye on the big picture of the markets and TWB, traveling with Bruce, and everything else I'm doing. But by the way, all of you out there who support my 2 channels, I can't thank you enough for that. Some of you have been mailing me postcards in the mail here and sending me donations in the mail. Some of you actually send cash. I don't mind getting cash in the mail. Put it in a card first, please. If you send me more than $10 US in any way, shape, or form, you get one of these babies right here sent back to you. I will send you Traveling with Bruce, custom-made Creston postcards. Haven't yet made Stock Markets with Bruce cards, but they're coming eventually. Thank you for that. If you become a sponsor member of Traveling with Bruce, you also get one of those cards. And by the way, I made a book review the other day, and I thought I'd mention it today to you guys. I reviewed this book the other day called Lethal Voyage. If you like going on a cruise, this is a cruise ship. That's a knife with blood on it. This is the third in a series, a Mike Stoneman thriller series written by Kevin G. Chapman. I read this book in one sitting. I went on a 6-day cruise by reading this book from New York to Bermuda and back, and I couldn't put the book down. I read all 330 some odd pages in one sitting Sunday night, even ignoring Sunday Night Football. Get your hands on this book. Just look up Lethal Voyage on Amazon, or look down below in the description of this video. There's a link there. You can pick up that book from $4.99 for a Kindle version up to $11.99 for a paperback. It's a good read, and I would recommend it. Kevin did a great job. It's a third in a series. He's written 2 other books already. Here they are here, Righteous Assassin, Deadly Enterprise, and Lethal Voyage. These are all Kevin Chapman books, and they're all, hang on one second here, let me get this out of the way. They're 1, 2, 3. You can read the third one by itself. It's its own story. But if you get all 3 books, you're now following a series of Mike Stoneman thrillers. Mike Stoneman is a detective out of New York, an investigator, and all kinds of things happen to him. It's pretty cool. This is the author right here. He loves cruising. You can tell he loves a cruise ship. That's a cruise ship. He's holding a Royal Caribbean drink right there. I wish I was doing that right now myself. I could sure use that for a little getaway, but unfortunately, not allowed. That's verboten right now. Right now, we're stuck wearing these masks. But if you're going to wear a mask, why don't you wear a Traveling with Bruce mask like this one, or this one here, or this one right here? This one matches my my coffee mug. Check it out. Yeah, see what I mean? Yeah, look at that, eh? Look at that. Ooh, that's fancy. So yeah, get yourself a mask. Go to my Redbubble store. Link is down below, and certainly on my homepage for Traveling with Bruce. Thank you, everybody. And then lastly, there's some of you out there who've been supporting me through my PayPal account right there. There, it's running down there. That account right there has been keeping me on the air now since September the 15th. Ever since September 15th, I have not been receiving ad money from YouTube. They tell me I know their ads are running on my channels. I know that. My viewers tell me that. My relatives tell me that. But at the end of the month, they tell me this is how many ads ran in your channel. This is how much money we're going to pay you. And then between the 2nd and the 5th and 7th or 8th of the month, it all disappears. It just goes away. They take it away from me. And then they send me a little note saying, oh, you had illegal click activity on your channel. So rather than take away those illegal clicks, they take away everything. And there's not a dang thing I can do about it. So I just out and out tell you folks, I'm not being paid by YouTube on ad sales these days. So this right here, right there, that PayPal is how I'm surviving. Link is down below. And any of you who've been sending me $10 or more, you get one of those. Remember to include your address. And thank you. Thank you, all of you who've been helping out. It means a lot to us. Jennifer and I are very much appreciative of that. All right. Okay. Any more comments that I'm missing here? Robert, hi, Bruce, bought the book. Did you receive my card? I did not yet, Robert. If you've sent it to that box address, it hasn't landed yet, but I'm looking out for it. Terry, buy low, sell high. Can it be any simpler than that? Oh yeah, playing the stock market is like going to a casino. Don't use money you can't afford to lose. A correction is looming. I think so too. People ask me all the time, why do you think there's a correction coming? And I say that's because the market is overvalued. And then they say, how do you know how the market is overvalued? How do you know when that's the case? And what I do is I look at something called a PE multiple. It's a price earnings multiple, the price of a stock versus the earnings per share and what the multiple is. So for example, if a company earns $2 a share and they're trading at $20 a share, you divide the $2 a share into 20, it's a 10 multiple. The stock's trading at 10 times earnings. 10 times $2, $20 a share. But if the company earns $2 a share and the stock's trading at 40, you divide it out, it's a 20. Now the stock is at a 20 times multiple, much higher than the 10 times multiple. The S&P 500 right now is way up over that. It is much higher. Historically, it is way out of whack with where it has been historically. And so the entire market, I'm not talking about just one stock, The whole stock market is way out of whack on a PE multiple basis, but not every single stock is out of whack. Some are more out of whack than others. And that's where the guessing game comes in. Which stock should I buy? What stock should I sell? And if there's a correction coming, should I be out of everything? And what happens if the market goes up another 15% before there's correction coming? I don't want to miss this move. This is the age-old problem that people are dealing with right now. But I think that on a PE multiple, if you can avoid stocks that are trading at a much higher PE multiple than they should be, like even something like Home Depot. Last I heard, it was a $25 multiple. That's ridiculous. It should be a 15 max 15 times earnings. 25 times earnings, that means the stock has 40% downside potential. Worst case scenario. Now, there might be a market correction that only comes off 10, 15%, and maybe Home Depot only comes off 5, 12, 14%. It doesn't even go down to 40%. That's not a full correction, but it's a partial, but you could still get your butt handed to you. If you lose 14, 15% of your investment value in your account, ouch, that can hurt. Some stocks will drop more than others and not recover as well. Others will drop more and recover faster. Others will drop less and recover back sooner. Every stock has its way about it. But if you can avoid the very high PE multiple stocks, that's one way to protect yourself. Another way to protect yourself is by put contracts against your largest stock positions. So if they do go down in value, the put contracts you have will go up in value to offset whatever loss you have. That's another way to play it. But I would be careful right now going hog wild into the market with high-flying PE stocks, and I would avoid the cruise lines at all costs. No paying passengers. Now, none expected till March 1, according to the cruise lines, none expected till September, as far as I'm concerned. These guys are going to bleed $1 billion plus a month for at least another 10 months. There's 10 billion in losses guaranteed to pile up on the books of all the cruise lines easily for the next 9-10 months. I don't know why I'd be long stock in that segment. I do not know why. Anyway, there you go. Just thoughts from a YouTuber here that loves the markets. And what can I say? Let's see here. Tom Henry, I bought the book on Kindle, then Kindle didn't want to download it, saying the internet was not available. Laugh out loud. It took me 3 days to get a connection, but it finally arrived this morning. Way to go, Tom, and way to persevere, buddy. Don't give up on that. Kirk, I just wanted to know, if I take money out of my account, do I have to pay taxes on the money? Only on the gains. But capital gains are taxed at a much lower rate than income, and you get to offset capital gains against capital losses. So if you have a stock that you're holding that you're down money on, and you've got some you're up on, sell the loser, sell the winner, and negate the capital gain to a small amount as possible. But even if you've gained $1,000, $2,000, $3,000, who cares? Pay tax on whatever you got to pay tax on. The rest is yours, and get back to work on it. Wait for the market to come back to you. Let it come back. Then buy in. And the upside going forward will more than negate any taxes payable. Don't let a tax man scare you into doing proper decision making in the market. Jiminy Good, this morning, even Jim Cramer laughed at the price of cruise stocks. Exactly. He's been doing this for weeks. He's been looking at the camera going, do people not understand the idea of profit and loss? Do they not understand you buy low and sell high? You don't buy high and hope it'll go higher. You don't do that. You buy bargains. You don't buy overpriced stocks. Also, he looked at the camera and was yelling at the cruise line presidents and the airline presidents and the hotel presidents and the shopping mall guys. Call your brokerage firms in New York and tell them that your company wants to do an at-the-market stock offering right now. And he's yelling at Carnival, get another billion. To Norwegian, take another billion. American Airlines, grab another $2 billion. Delta, grab another $2 billion. They're giving it to you on a silver platter at these stupid prices. Take the money now. It's free money. You can buy the stock back later when you are profitable if you have to do that. But in the meantime, you take the cash now and survive this 6-month more pandemic, 8-month more, however long it's going to take. Are we sure that every vaccine that's out there is going to work? Are we really sure? Are you sure that every vaccine that everyone gets, there won't be some side effects and scare some people off? Are you certain of that? Really? We're in a fantasy land if you think that. There's going to be issues. There already are issues with, was it Pfizer, and their delivery numbers are a little out of whack. Just little things like that are already creating nervousness. This market is ready to panic out at any time. But as long as it keeps rising, there are suckers coming in every day and paying top dollar for stocks. It just amazes me to no end. David, avoid being a market pig. Take profits and smile. Don't cry that you didn't get the last 10%. Gee, he's talking about betas. Bruce wants to ruin the value of the dollar. Robert, Bruce, doing well with Micron MU. Do you follow it? A little bit. Micron's had a good run, but what's that PE multiple? Be careful. Terry, the increases in the market are partly supply and demand. Many amateurs now having access to online brokerages. The volumes of trades is up over previous years. And the thing is, even if you like Micron and you like GameStop and you like Apple and you like Amazon, you like IBM, I don't care what you like. But if you like companies that theoretically make money, you're not a trader to the company. If you sell now, sit on cash, and do this. Watch this. This is something market players have to learn how to do. I'm a 65-year-old guy. I'm going to give you advice from the 70s. And this was told to me by guys who were in the market as stockbrokers in the 50s, okay? This is from old guys that told me how the markets work, and I'm passing it on to you, okay? After you sell a stock and you're sitting on cash, the smartest investors do this. Nothing. They don't do anything. They sit there and they watch, and their money is sitting in their account over there, and they're sitting there going, I'll buy. I'm a buyer. Yeah, that's the next move I'm going to make is a buy. But not today. Not at these prices. Only a fool would pay these prices. Are you kidding me? I'm buying bargains. I'm not buying overpriced. That's who wins. The one who pays the least makes the most. And right now, people are paying the highest prices for some of these shares ever issued, ever had, at multiples that are record-setting. And there are warning signs coming out all the time. There are warning little articles showing up in Market Watch and in the New York Times and in the Financial Post and the Wall Street Journal. Little articles come out talking about these markets are kind of valued like 1929. Does that year sound familiar to anybody out there? Others are saying they're kind of like 1987. I was a broker in 1987. In 1987, September, we had the single worst day in all of stock market history. Worse than 9/11, worse than the financial meltdown in 2008, worse than 1929. The worst single day in the markets was September 1987. The Dow lost 22% of its value in one day. 22%. What is that today? A 30,000 Dow, a 22% drop on a 30,000 Dow, I believe a 6,600 point drop in one day. That's what I was doing as a broker that day. 6,600 point drop in one day. And in 1987, we had computers with screens on them telling us what the quotes were. Unreliable. We couldn't phone, we couldn't talk to our desk trader. They didn't want to talk to us because they were overwhelmed with phone calls. The floor traders didn't want to talk to anybody because they were overwhelmed with floor calls. No one could get in. No one could get out because it was pros trading like crazy on the floor, not able to execute clients' calls. A tenth of clients' calls got through to the broker to start with. Brokers were taking buy orders and sell orders, running them to their desk trader to try to get a fill, and it would take 5 hours to get something back with no answer, and we had no clue what the hell the market was. The only way we had an idea what the stock market was doing is I would get a fill for a sell order for, say, a Bank of Montreal stock or something like that, being in Canada, and the stock closed yesterday at 50, and I put in a market sell order 10 minutes after the opening, and it took me 4 hours to get the fill, and it was down $10 a share. And I'm sitting there going, is this good or bad? Because where is it now? And then I'd find out someone else bought some stock or sold some stock in Bank of Montreal, and they got a fill $8 lower than me, whether they bought or sold. And that's when I went, I guess I'm a genius because I got out at 40 when it closed at 50, and someone else traded at the 32 range. That's how bad the market was that day. We couldn't get a straight answer anywhere. I didn't get home until midnight because I was talking to clients all evening from my desk to fill them in on what happened today. And in most cases, I told all my clients, don't do a damn thing. The only thing you're going to do is whatever cash you have, you're buying tomorrow. We're buyers because everyone panicked out. And sure enough, over the next 3-4 days, we got some good deals and we picked up some good price stock at bargain prices. And we just sat back and then did this and didn't try to day trade it. We just waited it out. And sure enough, 6 months later, the market hit a new all-time high after losing 22% in one day. Now, today's market, you've got circuit breakers. You can't lose 22% in one day. The reason you have circuit breakers now is because back then we lost 22% in one day. That's why we have circuit breakers. They invented circuit breakers after 1987. Interesting, huh? That's how it works. We old guys with white hair, the problem is we remember this stuff. What can I say? Let's see. What are people asking me here? Market plot, supply, demand. PE 1127. Should I buy? I'm not sure what 1127 is. Robert, I paid 18 for MU. Adventures with Duncan. Bruce, how's the new Apple computer learning curve going? Are you enjoying it? Love this computer. Everything I need it for, I'm having no trouble with it whatsoever. But if I had to do something completely different on this computer, which I would never do because I'm a YouTuber, I would be on a learning curve again. Robert, remember sitting in my office at Dunkin' Donuts in 1987, watching the crash, couldn't get through to Fidelity to make a purchase. That's right. You couldn't even call to buy. That's right. C-Dub, October 19, 1997, not September. 1987, buddy. 1987, and I believe it was September. September. Was it? No, it wasn't October.
No.
Jen thinks October. I thought it was September. It wasn't December. Ronnie Reagan was president. David, 1127 is the PE on Tesla right now. Not a buy for me. No, I'm not a buy for me either. I would not be a buyer of Tesla here. I would even be tempted to be a seller of Tesla now. I would love to be a seller here because it might go a little higher, but by how much, I really don't want to care to speculate, but it'll definitely go lower than this. It will back off. And even if you're a long-term believer in the company, if you sell here and it goes a bit higher and then it drops 100, 150 bucks a share, you can buy it back there. You can get more stock then. You can use all the money you got now by selling and put all of it back into Tesla, hundreds of dollars of shares cheaper. You got more stock and it goes back to where you just sold it at. You've got way more money on your hands because you have way more shares, much better leverage. That's something to consider. Or buy a put or two to protect your investment. See that Black Monday, I sat at my desk and there was no market maker, no bid on IBM. That's right. GE, General Motors, Ford, Bank of America, Merrill Lynch, all the big stocks, no bids. No bids to buy, just sell orders. Anybody that came to the floor with a buy order, there were 20 guys standing around. What would you like to buy and how much do you want? Jerry, October 19th, according to Wikipedia. All right, if it's October 19th, I'll take it. Well, David, sell Tesla now and buy other stuff, diversify, or sell and sit on cash and wait. Just wait. You're not going to have to wait long. If you've noticed how stocks react when they go down, they react quickly with conviction. Let me show you a little chart just for fun. I love doing this. This is Royal Caribbean this year. This is Royal Caribbean from December here to December now. And here we were in December and January, right up here, 137 bucks a share. You see that price up there? Way up there, 137 right there. See that? Look at the down dip. Look at the down dip this thing did right there. Zzz. We call that zzz in the business. 130 odd down to 19 bucks in about a week and a half. 10 days. That's all you're going to wait. Then you buy. You're a buy. You don't buy here. You don't buy here. You wait for the selling to wash out. And it washed out. And there's your winners. All these guys are the winners. And they sold here, and then they got back in again, and then they did it again. Sorry, I'm moving my phone. Yeah, we're topping out right now at another ridiculous level, and they've issued gazillions more shares than they've issued in the past. Norwegian, same thing. Look at the Norwegian price. Same thing. Absolutely insane. Here we go with Carnival. Here's Carnival. Same thing. Zzz. Every one of them. How about the Dow? You remember the Dow Jones Industrial? It had a bad February, March. Look at the Dow. Hello. Yeah. Hello. Yeah. Here we go. Right here. Zzz, there you go. That's where you buy. Yeah. Yeah. That's where you buy it around 21,000 and it's now at 30. Yeah. That's how you play this game. If you had puts, if you bought puts at the all-time record highs, even if you bought puts like back here and you lost money on them and you lost money on them and you lost money and you had a couple puts here and then all of a sudden this happened, you made it all back and more. You made it all back and more, much more. And you then turn around and you buy calls or you buy stock and sit back and now you do this and just let everyone play, let them play. Yeah. Anyway, you gotta have patience, my friends. What can I say? David, yes, if you want to buy back into the same stock, there are other stocks near the bottoms ready to head up now. Then they get back into whatever later. Yeah, well, when there's a correction coming, everything drops. Everything, even bona fide winners drop first. Maddie, Tesla has been amazing. I've held since 2014. I say hold on, but definitely diversify. Another stock I'll show you here. Here, Apple. All right, even Apple. Look at what Apple did. Apple here was doing this, went from here to here. Look at that drop. Very quick for Apple. It didn't kill the company or anything like that, of course, but it went from about 93 a share post cruise, pre-cruise, about $80 down to what's that? 61. The company lost 25% of its value in less than a month. There's a buying opportunity. Now, if Apple wants to do that again, if that were to happen again, I'm not calling a correction that's going to be that severe. But even if it wanted to give a 15%, Apple would go from the 120 range maybe to 100. That's a buy. That's a buy for a couple of years. That's a good buy for a couple of years. That's how you got to play this market. Right now, you're playing with fire. Marty, the closer you get to source and private companies that are going to reverse mergers into SPACs or pre-IPOs, your returns may be many times more than the regular market if the it's who you know that counts. Well, I remember in 1980, 84, 83, 84, 85, I was a branch manager, vice president of a brokerage firm in Canada, Calgary. And in those days, we had SPACs. We had penny SPACs. These are the good old days. Wild West, let me tell you. We were taking companies public at a dime a share, 15 cents a share, 20 cents a share. Private-based or public companies, shell companies. We would raise about, we sell about 2 million shares at a dime a piece, raise 200 grand. Less the fees, there would be about 170 grand in the bank. The founders of the company would have put in maybe $30,000 on their own to get it up and running. They'd have about $200,000 in cash in the bank and a listed stock. And then they would look for a private company to roll into it on a reverse takeover. It's what SPACs are today, except SPACs started 10. It's inflation adjusted from 1983 to 2020, 10 cents to $10. What would happen is a company would be brought in, rolled in there. It might be an oil and gas company. We were an oil and gas town in Calgary, Alberta. Bring in a small oil and gas company with 15 producing wells, and they would get this $200,000 in the bank rolled into their account, and then we would do secondary offerings. Try to do secondary offerings for these guys, maybe at 50 cents a share and that type of thing. But these stocks, the minute the deal was announced that company so-and-so is coming into this shell, we take a look at the guys running the private company and we go, well, these guys have been in the oil patch for 35 years. These are former Imperial Oil, Sunoco, former Chevron guys that went out on their own 5 years ago, created a private company. They know what they're doing. They've got a staff of 10, 12 people. There's some upside here. This is ground floor. I mean, literally ground floor. The stocks would go to $1. They go right to $1 because they'd be buying management. They would be buying faith in the management. And then brokerage firms would come along and the guys would go to the street and they would try to raise money at 50 cents, 75 cents, $1 a share. They try to raise $500,000, $1 million, $2 million. Remember, this is 1983. And they would raise, $1 million and they'd be involved in an oil field program where they have a 10% interest. They need to come up with $500,000 in cash in the next 6 months for their 10% interest. It's a $5 million play. And it usually was development wells. In other words, very low risk of hitting dry holes. The stock would go to $2. and they would do an offering at $1.50. And then they'd raise more cash and they'd develop out, and then they would acquire another private company and roll it in, because private companies would want to become part of public companies. Easier to raise money. So all of a sudden, instead of having 15 wells and they drilled 10 more, they got 25 wells. Now they've taken in another 15 well company. They got 40 wells. Now they're raising $2 or $3 million and they're adding more production. They have 80 wells of production. Within a year or two, they got 100 wells producing oil. This was used to be a nickel 10-cent stock. It's now $4 or $5. Well, if you bought it at a dime and you sat on it, you're up 40, 50 times your money. Now, you couldn't buy 100,000 shares at a dime in those days. Our brokerage firm limited our investors to a maximum of 2,000 shares at a dime, $200. That was your risk. And we would say I'd say to my investors, it's $200, Jack, give me $200 damn dollars. And they would. And I just sit on the stock and don't do a dang thing. Just sit there. Let's wait and see who the company is they're going to vend in. When we found out the name of the company and we knew who was running these outfits, then we would decide, do we want to sell the stock or buy more or just hold it? And many a time we'd buy more. We'd buy stock at 50 cents a share because we too believe in the guys who are running it. But remember, we have the 2,000 shares at a dime. Now we got some stock at 50. We got an average of 38 cents, 35 cents a share. Stuff goes to $1, we're up almost triple our money. Goes to $3.80 a share, we're up 10 times our money. See what I'm saying? SPACs, this is nothing new. Okay, if you folks out there think SPACs are new, you don't know what you're talking about. These were around in 1983. We used to call them nickel deals. The first blind pool that we ever saw go public on the Alberta Stock Exchange, nickel a share, 5 cents a share. Then they made it, about a year later, they upped it to a dime. Then they finally upped it to 20 cents. Now it's $10 on the big boards. And the reason it's $10 a share now is because the banks own the brokerage firms. Back in the day, I was a stockbroker. Banks didn't own brokerage firms all that much. They had a little interest here and there. They were all family-held or investor-held companies. And they'd be private firms that had family money behind them, capitalized at $30 million. And these firms would raise money for companies. Because in those days, $1 billion, to raise $1 billion for a company, unheard of. It was never done. No such thing as $1 billion underwriting. You got to kid me. The big underwritings were $25, $35 million back in the 80s. And so these family firms, and in the US, you had all the family firms that were still running around. They would form a consortium and then do an underwriting for larger companies. That's how it was done. I miss those days because now it's all bankers. It's all bankers. And so the bankers used to poo-poo us when we used to do the blind pools. They would look at those deals and go, you guys are just robbing people blind. You're sucking people in at 20 cents a share. They're going to get robbed blind. And we'd say, are you kidding me? I got a client of mine that's putting up $200. He's got 10 grand with me in his account, and he's using $200 to buy this stock at a dime. You're telling me he's risking? And you're offering mortgages at 18% right now. The prime rate was 18%. You're offering mortgages at 18% to someone who could get laid off next week. You guys are telling me I'm the risk taker? Get lost. The banks saw the market work so well and saw the brokerage firms make so much money. Guess what they did? They bought them. The banks bought the brokers because it's a license to print money. Sure as shit. Here we go. Today, SPACs, $10 a share. Offered by huge hedge fund managers, funding with $100 million, $200 million, $500 million, picking up private corporations, and all of a sudden you've got multi-billion-dollar companies. Look at is it not GameStop, but it's the publicly traded betting company, DraftKings. DraftKings trading at $49 a share. Here's DraftKings SPAC. Okay, in my day, this would have been a 10-cent deal and a $1 roll-in, and today would be a $4 stock. And the banks would be calling us speculators. Today, the banks have helped these guys raise a lot of money through all their connections, because all the brokers work for the banks. The amount of fees that the banks have earned from DraftKings, millions. And you buy DraftKings today, what are you paying? What PE multiple are you paying for DraftKings? Unlimited. They don't make profits yet. And it's trading at $49 a share American. There's not a dime of profit yet for those shareholders buying that stock. You want to talk about speculation? There you go. Anyway, hope you enjoyed today's show. We are running out of time. I have to go live on my other channel, Stock as Traveling with Bruce, for my sponsor members. If you want to join me for a 1-hour hangout show, got some trivia going on over there, head over to TWB, become a sponsor member, and join the gang. And every Monday and every Friday, I do 2 live sponsor member shows on Traveling with Bruce. Thank you for being here today. If you feel like making a donation to this channel, the PayPal thing is right there. 24 hours a day, 7 days a week, you can make a donation anytime you feel like it. And if you throw me $10 US or more, I'm going to send you a postcard and say thank you. It's the least I can do. Thank you, all of you, for being with me today. I really appreciate it. And guys, I will keep videos coming out for this channel. As I say, I think we are getting close to monetization, and we're looking forward to that day. What do you think of the IPO of Airbnb next week? That's stock coming out at the highs. Maddie, to piggyback off Robert, what do you think about any upcoming IPOs? Do you have any strong opinions, whether positive or negative? There's one coming up that I'm not so sure about. I'm trying to remember the name of it. It's the food, DoorDash. They're upping the price on this thing. I'm not so sure about that. Again, this to me is the kind of offering you offer in a bubble. This reminds me of 1999. But the good old days on the VSE and the ASE with reverse IPOs. Yes, sir. Marty, Pershing Holding, Bill Ackman, SPAC has from 4 to 7 billion cash in for the large company. They started at 20, now 26, without a company picked yet. I think that'll be a winner. Whatever it is they get, it'll be a winner. But it's going to be interesting to see whatever comes of that one. CW Good Old Days with Smile and Jack Gallagher. Bless his soul. Oh, man, the names from the past. Marty, the banks and largest brokerage firms got in at $20 coming up to the public. In DraftKings, they were buying at 20 before the public got in, and it's 49. That's right. The banks aren't stupid. They're very smart. They can afford those big office towers in Manhattan and every other big city in the world. Guys, thank you very much for being here. Thank you for helping me get the minutes I need to get this channel monetized. Hopefully in the next little while, YouTube will see fit to monetize this channel, and won't have to be begging for handouts through PayPal. But I'll take donations anytime. Far more lucrative to me. Thank you. Have a great weekend in the meantime if I don't see you. And keep an eye on this channel and Traveling with Bruce for updates on the stock markets and over there on cruise lines and travel news. All right, guys, that's it. I'm out of here for now. Take care, and we'll talk to you later. Take it easy.